Hey, we're Mortgage Nerd here. So what is a reverse mortgage line of credit? There's different ways of drawing money from a reverse mortgage. It could be a lump sum line of credit or monthly payments. A lot of times people just take this line of credit that they can use as they need it. They might need to pay off some credit cards now. Maybe they want to buy a car and pay that car off cash. Maybe their AC breaks and they need a new air conditioner. Whatever the case may be, there's different ways of using the funds as needed, as wanted. The line of credit is great because it has something unique, which is a growth rate. So the line of credit that you don't use grows. Borrowing power increases. So as you need those funds, you might have more and more available the less and less you use early on. What do I mean? Let's say you owe $100,000 and your interest is 6%. In 1 year, you'll owe 106, right? Because 6% is 6,000 and you owe 100. So 6,000 in interest plus the 100,000, you owe 106. By the same token, if you have a line of credit available of 100,000 with a reverse mortgage, that is going to grow at the same rate as the interest that you're being charged. If your line of credit is 100,000 and it increases by 6%, in 1 year, you'll have a 106,000 line of credit. So maybe in this case, you can take 6,000 and pay towards your property taxes and homeowners insurance. And guess what? You still have 100,000. So in your head, you're like, I'm going to keep this 100,000 as long as I can. And I'll just use the 6,000 every year that I need. Of course, a simple example. It's different for everyone. Be happy to go over your numbers to see how it works and explain deeper and go over some of these pros and cons. Bill Stevenson, Mortgage Nerd.